Welcome to our daily Forex market analysis call, and this is in preparation for trading on March 9th, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, so we'll start off as usual by taking a look at our Forex Factory calendar here. So the big thing that happened today was all about ECB. So we have seen for the last few days, this whole week actually, prices haven't done much during the London session, and we have seen larger moves in the New York session because there has been some piece of news coming out in the New York session. So today was all about ECB. So we saw that euro went up. Initially when the minimum bid rate was announced. So basically, the reason it went up was because first, it was neutral. So ECB didn't change their monetary policy. So they did not provide any forward guidance about interest rate hikes, did not talk about them. They said they would keep the asset purchase program running as is. However, there was one line that they had last time that they removed for this time. And the line was simply, last time they had this provision that they would increase the length of the asset purchase program is supposed to stop in September of 2018. And they had this comments or this statement about how, if needed, the asset purchase program would be extended. And this time that line wasn't there. However, they did say that any of the money that has been invested in it, they would repurchase the more securities with that or more bonds with that. So normally what happens is ECB will purchase bonds, their own bonds. And as this is a way of injecting liquidity in money into the market. So when banks have money, they are willing to lend it out to businesses and consumers. So as a result, it creates, sorry about that. So it creates that, it creates the flow of money in the economy. So that's what they've been doing for the last several years, ever since the big financial crash we had. So since then, economies have recovered, and that's why the central banks are changing monetary policy. Now with ECB, so that's why euro went up as a result of minimum bid rate. So when they didn't change it, they removed that line and it went up. So during the press conference, when Draghi was speaking and they asked him questions, so this question was asked to him as to why they removed that. And he was of the, basically, he essentially said that they are not looking to roll off that program. Their stance is still the same, that if need be, they're still going to keep that on. But he said that they're not looking to take away all of the liquidity from the market, so they will still keep reinvesting all the money that has already been invested. So basically, bonds are loans. So when the term ends, you could just take that money and remove it from the markets, or you could just repurchase bonds and other securities with that. So what they said was that they would repurchase. So they're going to keep cycling the money that's already in the system and keep it in there instead of rolling it off. So they're not going to buy any new assets, but everything that has been invested will be reinvested, and that's why we saw the big drop in the euro as a result of that. So that's what happened with the press conference. That was the bottom line of it. He was asked questions about what happens with the tariffs that U.S. has announced, and his answer basically was, countries should not make unilateral decisions like that, because this would start trade wars and there could be retaliation around that. So that's what he didn't, he worded it differently, but this is basically what the message was, that it's not a good idea for any country to do that because it's not good for anybody. So that's what's going on in the markets currently, or that's what happened today. And after the press conference, we just saw the big drop in euro and the British pound there. So that's what happened. Excuse me. So that's what happened. Coming up, we have another big event coming up tomorrow. So first thing, actually, we have two major events. One is Bank of Japan. So Bank of Japan is supposed to make their policy statement and monetary policy statement. So BOJ has said previously that they should start looking at changing the monetary policy, not right now, in 2019. And that's why we saw like the Japanese yen was stronger. But recently, or this week, what we have seen is we saw news out of North Korea, saying that they are willing to talk and they are willing to look at denuclearizing. So basically, they'll get rid of their nuclear program. And that is seen as a positive by the markets. And it creates a risk environment in the market. So basically, we see Japanese yen going down, Swiss franc going down, and US dollar going down. So that's what we saw earlier in the week, and we are still sort of struggling with that. But coming up now, Bank of Japan is not set to change their monetary policy at this point. But if they do make a comment like that, where they say, oh, maybe it's time for us to start looking at increasing the interest rates down the road. Any sort of comment like that will be positive for Japanese yen, and Japanese yen would benefit as a result of that. However, market right now is not pricing that in. It looks like market is pricing more stimulus from Bank of Japan. Bank of Japan has been notorious for doing this stimulus program that they've had for forever, essentially, and they have a very, very loose monetary policy. They keep injecting money into the market, and as a result of that, Japanese yen, the currency prices are low. But recently, because there have been other risks that have come into the market as a result of that, Japanese yen has benefited it. However, for now, that will be the main focus. Any yen trades would not be good at this point, because there is this big event coming up. It is tentative. We don't know what time it's going to come up. So we just have to kind of wait and see. Sometimes in the in the Asian session, or in the London session in the beginning, where we would see something like this come up. So just keep an eye out on that. Another big thing that we're going to see tomorrow would be non-farm payroll. And this will come out in the New York session at 8:30 a.m. Eastern. Non-farm payroll is a major event, always creates volatility in the market. So expect volatility. Right now, what we are looking at is it's supposed to go up. The employment numbers are supposed to increase. So there are several things, or three main things, that we have to look at here. One are the employment numbers. If the employment numbers come out positive, that's a good sign for the US dollar, and US dollar will benefit as a result of that. Now, within the non-farm numbers, there are other things that market participants will pay attention to, and that is full-time versus part-time jobs. So if full-time jobs are increasing, that's a good thing. If full-time jobs are increasing, that's a good thing. If part-time jobs are increasing, that's a bad thing. So basically, the idea is that people who cannot get a full-time job are going for part-time jobs because that's all they can find. However, the numbers have been good. Employment numbers have been good out of the US. So right now, market is expecting a slight increase in the non-farm employment numbers. Now, another thing that market will focus on is average hourly earnings. So average hourly earnings essentially mean that we have the hourly wage rate. So if the hourly wage rate decreases, that is not considered good for the currency. So that will have a negative impact on the US dollar. And then third number will be unemployment rate. So we could have positive number for employment and still have a negative number for unemployment. So with that, right now, we're expecting a slight decrease here. If the number comes in as expected or better than expected, then this will be positive for the US dollar. If it comes down quite a bit negative here, or, like 0.5% negative, that would be negative for the US dollar. So it's a combination of the three that decides what US dollar will do after the number comes out. So if you see that one number comes out positive, but then you don't know why US dollar is going down, that is why, because one of these other two numbers could have been negative, and essentially you want all three numbers to be positive, and that will be positive for the US dollar. So that's how to read the non-farm payroll numbers. Now we do have Canadian employment data that comes out, as well as manufacturing production for British pound there as well. So a lot of news coming out tomorrow. So just be mindful of that and expect volatility in the market. So let's go on to the charts now. Euro dollar, we saw that the price did not break above this 124.37 number that we had talked about yesterday. A big drop, bearish candle close. So as a result of that, looking for price to drop further. 122.20 will be the target to the downside here. So looking for price to break down further here. Now do keep in mind with a non-farm payroll number, stuff can, things can change quite drastically. So keep that in mind. Just like we saw with the ECB, euro went all over the place. That could happen with the US dollar as well. Okay, so next one is, here, let's take a look at the 1 hour. So here we had a double top. Today, this was during the ECB press conference, price pushed up right into our R1 level and then dropped from there. So right now it is sitting low. And this is the opposite of the dollar Swiss franc that we had talked about yesterday. So right now we have this bearish flag formation. So looking for price to continue lower. So because the price is holding low, when price does that, generally it tends to drop further. So this is a bearish flag formation, looking for price to drop further there. So euro dollar is bearish. Pound dollar, same thing here. It wasn't able to break this level 1.3930 level that we were watching out for. So now we have seen a nice bearish engulfing candle close. It has engulfed these previous 2 days, almost 3 days of price action here. That is quite bearish. So looking for price to drop further into this previous support and resistance area at 137.20 level. So the bias is to the downside here as well. And similar scenario here, again, we have price drop. So we've had this multiple test of this previous level coming all the way from here. So now we saw a drop and we are seeing this consolidation, looking for a further continuation of the move here. So bias is to the downside. Target would be 1.3720 level to the downside. Aussie dollar here, bearish candle close. Now, surprisingly, commodity currencies were quite bullish, or not bullish, but they were not as bearish as some of the other ones, risk currencies like Aussie and euro and pound there. But overall, we talked about this hanging man formation, which is a bearish signal here. So we saw this bearish candle close. So overall, this is bearish, looking for a drop, further drop here into 77.20 level, which is the previous pin bar here. So a nice bearish formation, looking for a drop. This is where we are again. So we saw a double top and prices drop. Now it's just consolidating. So looking for a continuation move to the downside. But overall, though, commodity currencies were not as bearish. Say this one here with the New Zealand dollar was looking for a price to drop. It did drop. It just hasn't dropped as much as I would have liked to see it drop. So this one sort of held its own. So New Zealand dollar and Canadian dollar were surprisingly bullish. Well, they weren't exactly bullish, but they kind of held their own and they did not drop when everything else dropped against the US dollar. So this one, we are still bearish. My bias is still to the downside here. Again, with all the US crosses, it will be the non-farm payroll will have an impact. So do keep that in mind. But this one, we have a bearish candle close, looking for it to drop further. The target here would be 0.7200 level here. Just looking for price to drop into the next support and resistance area. Outlook is bearish on this. If you take a look here, we are seeing that price is consolidating here sideways. So right now it hasn't done anything. And here we are sort of, this could be better, but that's what I'm looking for price to just sort of come back down here to the downside. But right now it is just consolidating sideways, and it has done that the entire day. But the bias is to the downside. Dollar CAD here, this one has been a range-bound move, but overall, Canadian dollar has held its own. And part of the reason for Canadian dollar actually being bullish, because it is dropping. So if you take a look at our daily here, we see that the price is dropping. So dollar CAD is bearish, which means Canadian dollar is bullish. And the reason for Canadian dollar to have that strength is because of the tariff talk. So this is where we have been seeing a lot of comments and stuff like that has been coming into the market that is driving price action this week. So President Trump announced tariffs for everybody, essentially on steel and aluminum. And now he has gone back and said that, well, Canada and Mexico will be exempt from that if they're able to sign the NAFTA, which is the free trade agreement between Mexico, Canada, and the US. So those are the three trade partners, and NAFTA is being renegotiated. So the negotiations have carried on for quite some time now, haven't really been able to reach the, not sure why we are sorry, I lost my train of thought here. Is anyone else having volume issues, audio problems, or is it okay? If it's okay, then if you could please type in yes, volume is good. Got it. Okay, perfect. Excellent. Thank you. Thank you, everyone. So Canadian dollar, as a result of that, has actually dropped. So now we have seen, yesterday we talked about how there were 3 tests of this level and price hadn't dropped. It was trading in this sideways range for quite some time. So if you take a look at 1 hour, see how price is in this range. It is still in this range, but now the pressure is to the downside because we have had a lower high here. So price tested it 3 times, triple top here. Then we had a new lower high, and now it looks like it is pushing into the bottom here, which means it could break out to the downside. And also when we see that the price has rejected the higher level so many times, now this is a 4th day in a row, we have a pin bar here. That means pressure is to the downside, and we could see a break to the downside. So it has this sort of a downward momentum in it right now. So this is bearish, and I am looking for a break of this level first. 1.2870 level will be the one to watch. But with all these pins to the upside, it shows that price is heavy. I'm looking for a drop here, and the next target would be 127.94, so about 12800 level to the downside. Now, just do keep in mind with non-farm payroll and Canadian employment numbers tomorrow, this is likely to be volatile pair going into the New York session. So just keep that in mind. Euro pound here, we looked at this pin bar and we're looking for a drop here. Now, this one did push back all the way up because both of those currencies were impacted, but now we have another pin bar, so looking for price to drop further here. So the bias is to the downside, and the target is 88.80 level, which is the bottom of this pin here. So bias for euro pound is to the downside. So now we have almost a tweezer top here, but a nice pin bar looking for price to drop further. Euro Swiss franc here. This one we see a pin to the upside. This is a spinning top formation. So we do have a bigger pin on the top, which suggests that price could drop. However, it is a neutral, almost a neutral trading signal. So this one may not be the best one to trade, but because we have a larger pin on the upside, it has a little bit more of a bearish. So I would say bearish to neutral for this one. If the price comes down and comes back below this 1.17700, or if it stays below 1720. So where are we? 1720 is right about here. So it's going to test the pin here. So if it stays below this and closes below the pivot here, then I'm looking for price to drop. However, if it closes above this 1.1720 level, and then it could go up into the next one. So this one has more neutral stance in it. So I would watch and see. Pound Swiss franc, this one is still has momentum to the upside. We are into the resistance level here. It is losing momentum because now the candles are getting smaller. This was a really, really small candle here, but regardless, it is to the upside right now. So 1.3137 level, or slightly higher, right into the tippy top here. 1.3145 level will be the one to watch. If price stays below this, it could turn around, but overall bias is to the upside. So if it breaks through this 131.50 level, then we are looking at 132.30 level to the upside, which will be the top of this pin here. So basically right now, the base case scenario will be to watch what price does, where it is currently. If it breaks to the upside, then I'm looking for next level. Otherwise, looking for price to come back into the range. As you see, for the last few weeks here, we have been trading in this range. So price could turn around. It has turned around multiple times at this level. So it could turn around. There's that opportunity. So the base case scenario is a range bound move, which would suggest the price moving to the downside. But if it breaks up, then we are, or breaks out to the upside, then looking for price to go up further. Dollar Swiss franc, this one we had talked about this being bullish yesterday based on this bullish pin bar here. Now price has moved up higher. This is a big bullish candle close here. So looking for price to move up further into this 0.9580 level, back into the support and resistance level. So bias is to the upside for dollar Swiss franc. Pound yen here, we did have a nice bearish candle close here, but with all the yen crosses, looks like market is pricing in a negative BOJ statement. So that's why we're seeing everything push up against the yen. So yen is weakening going into the Bank of Japan announcement. So with this one, daily closes to the downside. So bias is to the downside, but with Bank of Japan coming up, this one is going in the opposite direction of where the daily bias would be. So just purely looking at technicals, I would look for price to drop further, and the target would be 145.20. But like I said, price is holding above this 146.50 level. And if Bank of Japan is negative, is dovish, then this could push up higher. So I would be careful with all the yen crosses at this point. Same thing, euro yen, we had a nice bearish engulfing candle, engulfed all this price action here. So the bias would be to the downside here, and the target level would be 129.80 to the downside, which is right into the support and resistance area. But just like I said before, prior to Bank of Japan here, looks like market is pricing in a dovish statement, and hence we are seeing the push to the upside. So if they are neutral, or if they are they're even slightly bullish, this could drop. So based on the technicals, the bias is to the downside. But again, I would be mindful of these yen crosses because we are into support here and price is bouncing off of the support. Dollar yen is actually bullish. So we had this hanging man, which did not play out, and we got this small bullish candle. But right now, like I said, looks like market is pricing in a negative dovish Bank of Japan statement, and we are seeing everything go up against this. So the target here would be 107 or even one of 720 level to the upside, which is the top of this pin. So right now, looks like it wants to go up. Aussie yen, same scenario here. We had a hanging man. We did see a drop. However, now we are pushing back in or back to the upside. If it breaks the high, this previous support and resistance level, it is likely to move up higher. This is where price has turned last time, but now it's pushing up. So we could go all the way into this 8,400 level, right into that support and resistance. So 8,400 will be the next target if it breaks above this 8,329 level. CAD yen has gone up. It did not, it could not sustain the move below the pivot point here, and it has completely turned around now. So this is looking bullish. So again, we had this hanging man technical trade set, which did not play out. We got this small move, and now it is pushing to the upside. So first target would be 88.80 now, which is basically where it is. And if it continues higher, then we are looking at 83.68 level, or let's say 83.50 level to the upside. So this could continue, but I would be mindful of any of the yen crosses. So same thing here. We did have a bearish hanging man, but it hasn't been able to break the support here. So now it's pushing higher. If it goes to the other side, this is very similar to Aussie here. If it closes on the other side of 77.65 level, then we're looking for a further move to the upside into 78.30 level to the upside. But again, the high here, the previous support and resistance level, will play a role. Euro Aussie here. Euro Aussie did a nice drop. All the euro crosses against the commodity crosses and pound crosses against the commodity crosses played out really well after ECB here. And looking at a further drop, so we had a pin bar, very nice bearish candle close, looking for a break of this 1.5790 level and looking for further move to the downside. Target would be 1.5605, which is bottom of this range. So it had sat in this range for quite some time before it went up higher. So now once this support level breaks, looking for price to come back into this range. So bias is to the downside for Euro Aussie. Pound Aussie, again, we have seen price come into trouble at the highs here. It is going sideways right now, but since it hasn't been able to break the high, the bias is to the downside. So the first target would be 1.7580 level, which is the bottom here. Next one would be 1.7200 level, which would be the next support and resistance level here. So bias is to the downside for Pound Aussie as well. And then we have Pound CAD. Got too many lines. Okay, so this one is also bearish. Once we see a break, so that's a very nice bearish candle close here. Once we see a break of this support and resistance level where it is currently 1.7780, looking for a further move to the downside, into 1.7600 level. So this looks like a nice bearish formation, looking for price to drop further here as well. So this is again one of those bearish flag type of formations. Price is moving lower. So it dropped, consolidating sideways here. It's almost like a triangle here, and basically looking for a drop to the downside. So this looks quite bearish. Biases to the downside. EuroCAD, similar formation here, very nice bearish candle close and looking for a further move to the downside. So this one was into a weekly high. So if you take a look at it, price has not been at this level in quite some time. So 1.6100 level, this was back in December of 2015 or November of 2015. So a long time. So this is a major support and resistance level here. And generally when price comes into such a big support resistance level, price generally drops, bounces off of that level, or at least struggles with that level. And that's what we saw here. Price dropped And now the bias is to the downside. So looking for a further move to the downside in this one as well. The next target is the bottom here, which is 1.5740 level. So looking for price to drop further. Pound New Zealand, same thing here, bearish candle close, looking for price to drop further. 1.8900 will be the next target to the downside. So overall, we've had this downward trending move. So looking for price to drop. So I'm actually not looking to take any yen trades because of Bank of Japan. It is, I expect things to get quite volatile. No point in basically getting in the middle of that. Aussie, New Zealand, so last one here looks bearish, looking for a further drop into 1.0660 level, which is the bottom of this range here. So bias is to the downside. All right, so that's all I have. Any questions or anything to add here? Okay, if not, we'll call it a wrap. So you guys have a wonderful evening. I will see you again in the morning for our webinar tomorrow morning. So there's no trade room session tonight, but I will see you for the webinar in the morning.